Hello, hello. This is George Masri, the host of the Well Off podcast. And today I interviewed Jesse Bobrowski, who is the VP of Business Development at Calvert Home Mortgage. For those that don't know, Calvert provides short-term mortgage options to people in Alberta and Ontario. They focus on working with real estate investors to basically provide you with mortgages with a very, very small down payment. They mentioned $10,000 down all in. So you don't need to put 5%, 10%, 20%. Just $10,000 gets you a mortgage with them and they're able to close quickly. But of course, this is a short-term option. So on this episode, we talked about how you can use these programs to complete flips or the BRRRR strategy: buy, renovate, rent, refinance. And then we also talked about how it's possible to succeed in a flip. What are some of the things that they see because they work with a lot of flippers, and then also what to avoid if you're looking at flipping. There's a lot of other good stuff in here, so I hope you'll enjoy the episode. And if you want to download Calvert's Flip Analyzer, it's a spreadsheet that they've created specifically for flipping, and then also they mentioned they're going to add a tab for BRRRRing. You can go to welloff.ca/E96, E as in Edward. So again, welloff.ca/E96. And if you want to connect with me, you could go to my Instagram page, welloffx. I'm happy to chat with you guys. I hope you'll enjoy the episode. Make sure to share this with somebody who would appreciate it and leave us a review on the Apple Podcast platform. Enjoy. Welcome to the Well Off podcast, where the goal is to motivate, inspire, and share success principles. I am here with Jesse Bobrowski. I hope I said your name properly. With Calvert Home Mortgages, the investment corporation, which some of you guys may have heard of already. We're going to talk about private mortgages. We're going to talk about helping people complete flips and BRRRRs and that kind of thing. So some really creative financing options. Jesse, thank you for joining me today. I appreciate it.
Awesome, George. You pronounced my name perfectly. Thanks for having me and looking forward to the discussion.
I usually like to ask how to pronounce the name before we start recording, but I forgot to do that today. So I'm glad I got it. All right. So Jesse, I like to start off by asking about your childhood. Do you want to tell me where you grew up and maybe one or two memories from when you were a kid?
Yeah, absolutely. I grew up in small town, Northern Ontario, way Northern Ontario, Thunder Bay. Mm-hmm. Lived there through university, and upon finishing university, moved to Calgary to start my professional career. A few things noticeable, or a few things that are fond memories of my childhood. Thunder Bay is a great, tight-knit, small community, although it is 100,000 people. Because we're so isolated from other centers and towns, everybody knows everybody. So growing up surrounded with a really good group of friends who I still stay in touch with, although they're spread out all over the world. Did a lot of stuff outside, even though it's often cold and snowy. We grew up playing hockey, skating on the outdoor rinks, doing a lot of fishing in the great wilderness around there, a lot of hunting as well. So definitely a sports enthusiast and outdoorsman.
Cool. That's awesome. I know, I can imagine, because it's cold over here, like in Southern Ontario, but I can only imagine. I've never been to Thunder Bay. You guys must get a lot of snow. It must be pretty tough out there in the winters, but you get used to it when you grow up there, right?
Get used to it. Yeah. For sure.
How did you become affiliated with Calvert? Because from my understanding, Calvert's based out of Alberta, I believe. Is that right?
Yeah. Calvert's based out of Alberta, and I'm in Alberta. So
okay.
How Calvert and I found each other is upon finishing university, I moved to Calgary to work in finance with oil and gas. And this was back in 2007. Through university, I bartended. So when moving to a new city and starting a new job, I figured, what better way to network and meet people than continuing to bartend? And while working my day job, I would bartend in the evenings, and I met a husband and wife couple who owned a mortgage syndication company. And this was during, the beginning of the subprime meltdown, and there was a lot of information on alternative lending out there in financial reporting. And I was very interested in hearing what they were up to and how they were structured and how they were helping people. And the more I got to know it, the more I found that it really resonated with me. You know, like the banks are a very tight box, and rightly so. But the banks are also not helping everybody who can be helped. There are a lot of really great instances where private and alternative lenders are helping. So over time, I got to know these people, started working with them, consulting, and then left my oil and gas job, started working with them full time, became a partner, and then the opportunity for growth. I just met the owners of Calvert Home Mortgage, and what their plans were really resonated with me. And 6 years ago, I joined Calvert. 4 years ago, I became a vice president, and a year ago, I became a partner. So it's been really great. We've seen a lot of growth at Calvert. When I started, we had $35 million of assets under management. Today, it's 230. And a lot of it is just based off of treating people right. Our goal is to create an effortless experience for the personal and financial success of others. And by focusing on that goal, serving underserviced segments of the mortgage market, for us, it's particularly real estate investors. We've seen tremendous growth, but more importantly, tremendous success in terms of stable growth, where we have a foundation that we're going to be able to build on for years to come. And we have plans on continuing to help people through our offerings.
Okay, so let's talk about that a little bit. Tell me, how does Calvert help investors? What services are you providing to them, and what makes you different from other lenders?
So with real estate investors, we are laser focused on helping individuals for short-term residential mortgages. So these are typically flippers and people who are BRRRRing. What makes us unique is, firstly, we can provide financing with very little down. So in Alberta, we're lending with as little as $10,000 down. Mm-hmm. And in Ontario, it's $20,000 down.
Sorry, I just want to interrupt very quickly, just in case somebody's listening and they don't know what BRRRRing is. Buy, renovate, rent, refinance. That's what it stands for, in case you're a little bit lost there. But sorry, go ahead.
Yeah, no, thank you for that. And there's another BRRRR that we really love, which is repeat. So watching people build a rental portfolio through this strategy. So with that type of borrowing, banks simply don't want to service that. Yeah. And the reason banks don't want to service it is because it's such short term. It's not a profitable loan for them, mm-hmm. right? When a borrower is in and out in 3, 4, 5 months, which our borrowers typically are, the banks aren't making money. Also, a lot of times, these borrowers are buying properties that are run down, have significant deferred maintenance, and are properties that simply don't qualify for banks because of their current status. Yeah. So we're saying we want that business. Also, our competitors, a lot of them don't want the short-term turnaround. And those who are not willing to understand that the borrower has a budget, they're going to refinance it, and it's going to be worth significantly more when it's done. So we value the properties as if they're renovated. Then what we do is we back out all the expenses, including holding costs and we get down into the monthly electrical bill. Yeah. And make sure that our borrowers have a sound plan and that they're going to be profitable, at least from our perspective. And if they are, we're going to provide our financing.
Okay. So why don't we just kind of give an example here? Let's say I bought a property. And typically, I know a lot of times things like this happen where you're buying from a wholesaler. So a wholesaler brings a deal, it's under market value. You're buying it, let's just say hypothetically, for $400,000. And you know that after fixing it up for $100,000, dumping $100,000 in, it's going to be worth $750,000.
Okay.
And it's going to take 3 months based on the renovations to complete this project. So you guys would say, okay, well, we have a program where you can put $10,000 down, let's say.
Yep.
Or 20,000, or I don't know exactly what the numbers would be. And
well, let's use 10,000 for argument's sake.
Yeah, 10,000. So all you have to do, you don't have to put any percent down. It's just $10,000 flat fee. And that gets you a short-term mortgage through Calvert so that you can buy this property, fix it up, and then you know that at the end of 3 months, you're going to go to a bank or to an A lender or a B lender or whatever other lender you want and get an actual mortgage on the property.
Yeah. So that would be the BRRRR example where they buy, renovate, they'll probably rent it and then refinance it. Yeah. And with your numbers, they're going to have to inject that 100,000, and they're going to inject that 100,000 whether through cash in a savings account, lines of credit, credit cards, partners.
Yeah.
So they're going to have 500 grand in, right? Plus our carrying costs. I'm going to ballpark our carrying costs, George, in this instance at 30,000.
Yeah, which is is this like the interest rate on the financing for the short term?
Interest rate on the financing for the short term, plus like utilities and insurance and that type of stuff. So let's say they're going to have all in around 530. At 750, they're probably going to exit at 80% loan to value from a bank.
Yeah.
So they're going to get a mortgage of 600 grand. So in this example, they're going to have exposure of 530. They're going to refinance it for 600. They're literally going to pull out $70,000 and be able to do that again.
Yeah.
Or what a lot of our clients do is simply sell that.
Right. So same situation. You buy it for 400, you put 100 in, you've got your carrying costs, the financing fees, whatever. And then you sell it for 750 and you're turning a profit of probably over 100 grand after all expenses.
Yeah. Now the deal that you're describing here is a bit of a unicorn, especially in this very tight market.
Yeah.
Where deals are hard to come by. But on average, we're seeing our clients net approximately $48,000 on a per deal basis. And the average loan amount that we're lending is just under 400 grand.
Yeah.
So, and they're in and out on average in 5.5 months, just to give you a feel for what the typical investor is doing. Of course, some are tighter margins, some are much more robust margins, but on average, they're just under that $48,000 net profit.
Yeah. Yeah. So that's what separates you from other lenders, because there are a lot of private lenders out there, but I've never heard of one that would finance a deal with only $10,000 down. I know that you can like pretty easily find a private if you're putting 20% down, 30% down, that kind of thing. But there's a big difference between that and what you guys are offering. And that helps somebody who's flipping, if their budget's, like in that example, 100 grand, if you have 150 grand in total to play with, then using your service would make the deal work. Otherwise they wouldn't be able to do the flip.
Yeah, we're reducing one of the biggest barriers to entry, which is cash. But also for the more savvy investor, they want to do volume. So now we're allowing them to do volume by having low money down. And then with higher down payments, we do run up against other privates for the higher down payment stuff where they're putting 20-30% down. Our pricing goes down as they put more down. But also we're reducing the friction in the transaction, and we're doing that we do our own valuations. So we have appraisers on staff who appraise the property as if complete. Trying to get an appraisal done on an as complete basis is really tricky.
Yeah.
And also not many lenders will recognize that.
Right.
So by doing that, we can approve deals very fast, because the thing that slows underwriting down the most is waiting on a third party value. So if you have everything to us, we can value the property same day. We have in-house legal that can send instructions to your lawyer same day. And we can fund in 24 hours.
Yeah, that's a huge
value add that not many other lenders have.
Yeah, that's a huge benefit, because sometimes if you come across that unicorn that you mentioned, the $400,000 property, you might need to close very fast. And if you don't have the right lender in place, you might not be able to get everything aligned in the time period that it takes. So like you guys, I know, because I've looked into working with you on a particular deal a couple months ago, and I know that you were able to provide funding very, very fast within less than a week. So that's a huge benefit.
Yeah. And so us being able to move fast is a benefit like you described, George, but also when you're sitting at the negotiating table, and a lot of these times it's a private seller.
Yeah.
You can say, what is important to you? Like, I can close next week if that's important to you. And if you're solving that problem for them, you might be able to get a better price. So in a lot of instances, we're saving our borrower money by being flexible with how quickly we can move on their behalf.
Yeah. Can you share, because I know it varies, right? Like I'm sure it's case by case basis, but is there like a certain range for interest rate if you're putting the minimum down, the 10,000 or 20,000?
Yeah. So for the minimum down, it's very consistent. It's 15.5% annualized. So 1.29% per month.
Yeah.
And the mortgage is fully open. So like I said, typically we're getting paid out in around 5 months. That's kind of the high end of the rate. The low end of the rate is when you're putting 25% or more down. We're lending it at 7.9% annualized.
Cool.
Yeah. And
I know that might scare some people when they hear it, 15.5%. That's crazy. Who's going to pay that? But yeah, again, you have to realize that this is just a short-term thing, and the actual cost to borrow that amount of money, if you have the right plan in place, it's actually, it could be very lucrative for you. So you just got to factor in all the numbers and see if the deal makes sense with that financing rate.
Yeah, exactly. It can sound daunting, but we have a flip analyzer that I'll share with you to share with your audience, or people can reach out to us directly to wade through really what it means in dollars and cents, because a lot of clients are very focused to a fault on the rate number versus analyzing what it means for dollars and cents. So I'm just doing some quick math as we discuss. So the actual cost on the deal that we just reviewed, at 15.5 for 6 months would be borrowing 400 grand at 15.5% rate for 6 months is $31,000. At 7.9, it's basically half that, call it 17,000. So that's about a $14,000 difference.
Yeah. But when you think about it,
they just made 130 grand.
Yeah. And I think like the percentage might sound scary to some people, but if you just use that number, the 31,000, and you say, hey, we can make the deal work, but it's going to cost you $31,000 in additional fees, then I think that would make a lot of sense to people when you look at all the numbers, top to bottom.
Exactly. And a lot of people use a joint venture strategy.
Yeah. In
a joint venture strategy, you're going to split that 150 grand you just made. So 75 grand versus 31 grand. Or worse, even worse, having to say no to the deal.
Yeah.
So we're, it's all about, or another thing that we want our borrowers to consider is, hey, are you going to put in all your money you have available for a down payment in order to drive the rate down and miss the next opportunity to make 50 grand?
Yeah.
Like, so we're really good, and we want to educate our borrowers to say, here's the options. Here's how much profit is in it for you. Ooh, this is a lot of our deals, George, are bad deals. Yeah. Hey, Calvert's going to make a lot of money by you buying this property. You're not. Calvert's interested in you doing 100 deals with us.
Yeah.
If you do this deal, you're probably going to be out of the game.
Right.
So, yeah.
Well, I was just thinking, so you mentioned that flip analyzer. If it's okay with you guys, then I can make it available to all the listeners if they just go onto the website they'll be able to download it for free. I'll send all the links if that's okay with you guys.
I'm making a note right now. We love that. So we'll get it off to you. We just did some further automation on it and are adding a BRRRR tab. We don't have the BRRRR tab ready yet, but we'll definitely send it your way after this conversation.
Awesome. Okay, we'll do that. So I know you guys work with a lot of flippers, as we've kind of been talking about. But what advice would you have for somebody who's looking to do a flip using your financing strategy to have the highest probability for success?
So in order to increase your likelihood of success, you're going to have to do work. Unfortunately, success. And this is one of my big personal philosophies is not overnight. It's built on a lot of energy, a lot of learning and effort. So our most successful flippers are the flippers who truly own the process, who know how to run the numbers in our flip analyzer, who know how to look at comparables and understand that this is what their property is going to be worth, who know how or which trades they're going to need, who know how to create a budget. They may not do the work, but they know how to hold people accountable. They know how to hold their realtor accountable. They know how to hold me, their lender, accountable for, hey, is this the best rate? Is this the best fee? Or am I getting the right deal? And you'd be surprised how many people just rely on their realtor, who, God bless their realtor, that they're doing what they think is best for the client, but are they really digging into the numbers and making sure those are the best comparables? Trusting their renovator. They hire a general contractor. That general contractor shops everything around. Is the general contractor getting 2 or 3 quotes? Is it a vetted plumber? That kind of stuff. So these are 3 things to do. They cost you no money. And you're learning along the way. When you're doing that, you're going to increase your likelihood of success significantly. So that's the biggest, that's the secret sauce, is doing the work. Knowing the market that you're going to want to be in. So yeah, doing the work. And then of course, there's a lot of general ideas that we can provide to our borrowers, which we always do, which is get into a market, get into a larger market, right? A larger market will have more buyers. So yeah, you might see a great deal in this little 5,000 people town that's, out there, and it's a bedroom community. Well, when the market turns quickest in those bedroom communities. There's only a certain amount of people that are going to look to buy your house in that community versus in a city of 100,000 people or more. Also, especially new people, limiting the amount of renovations you're doing, making sure they're predominantly cosmetic. You don't want to start moving walls and changing, changing plumbing changing electrical from knob and tube, because that introduces more variables. More variables increase the likelihood that you miss something. The likelihood that you miss something increases your budget, increases your time you're borrowing from me. So keep it simple is always the best route. And we've seen most success when they're doing that.
So obviously all this applies to like new flippers, but if you've been doing this a long time, then you understand the numbers and you know what to expect. But this actually makes me think. So if any of the listeners are possibly interested in maybe walking through some of my projects, because we have a couple of renovations going on, I'd be happy to connect with you and see if maybe you guys can come through. You can meet some of my guys, the plumbers, electricians, and add them to your Rolodex as well. So you can connect with me on Instagram if you're interested. WellOffX is my whatever it's called. I forget what it's called. But yeah, Instagram, WellOffX. And then we can discuss getting you guys to walk through. So that was just a little side note there. But so Jesse, I know we talked a little bit about the highest probability of success. Are there any mistakes that you see that are pretty common? I know you kind of touched on it, but what would be like one of the more common mistakes that flippers make?
Yeah, the common mistakes are trusting too much, putting too much trust in a realtor and a tradesperson. Not holding them accountable. So they may be off on, again, your after repaired value. That's where we come into play, because we're pretty darn good at that, and we're watching both of our backs on that end. But also with trades, like especially today, in today's day and age, with it's easy, whether it's true or not, it's so easy to say, oh, supply chain, we got to wait X amount of time for this product to come in, or not being on site, and delaying the timeline really increases your costs. So that's one thing we see a lot of, not understanding your market, like going into a market that's 3 hours away from you. How are you going to hold your crew accountable for your renovations when you don't have either your own boots on the ground or a trusted advisor's boots on the ground? Other things that we see as common mistakes is finding a very unique property, and you make the numbers work as if it's going to be very profitable, but you're missing the uniquenesses of the property, which is why you're getting such a good deal. So, converting the biggest house, like converting a 2,000 square foot 2-story in a neighborhood that's all 1,000 square foot bungalows. A buyer that might not appeal to a buyer because of the uniqueness, or converting or getting into things where there's a lot of unknowns, converting commercial into residential.
Because then you have to go through an approval process that could take a long time. There's all sorts of things. So basically what you're saying is just keep it simple. If you're starting out, don't do anything fancy. Just try to get something where it's a cosmetic flip, get in and out quickly and make your money. And then, as you get more experience, you can start doing those more intricate builds and renovations and additions and conversions and all that.
Totally. Okay.
So maybe last thing, before we end the podcast here, if you can kind of like quickly walk me through, what would it look like if somebody approached you and said, I have this property that I want to get financing through you guys. I want to put the minimum down. For let's say step A to Z, what would it look like, just briefly?
Step A to Z is, okay, you got a property, you got a plan. Send us your plan, so your renovation budget. Here's Calvert's one-page application. Fill this out. With that application, we'll pull your credit bureau. I want most recent NOA just to confirm that you paid taxes. Then we analyze the property. We say, here's the purchase price, here's the rental budget, here's what it's worth when it's done. Then based on that, we look and say, ooh, there's money in this project. George, in order to get this done, you're going to need your budget plus your hold cost. Let's call it 70 grand. Show us that you have that in, again, savings accounts, lines of credit cards, partners. Show us that you have the ability to complete it. Okay, you got the ability to complete it. Here's a commitment letter. George signs the commitment letter, sends it back. We know who George's lawyer is. We send the instructions to George's lawyer, gets funded. It's really that easy. And then once we have that app credit and NOA on file, we don't need that again for a year. So hopefully we get to do 3, 4, 5 deals a year, where all we're looking at is budget, after repaired value, proof of funds. And if there's money to be made, Calvert's lending the money.
Cool. And that way you guys are looking to, like you said earlier, you want to make sure that the person that you're lending the funds to is in a position to succeed, and you're not just, capitalizing on the interest rate and potentially getting into a bad deal where the person's going to fail. You want to make sure they're successful so that they can continue to grow and do these projects over and over.
And as you said that, George, I missed an important piece, because I was considering it if you were bringing us a deal. One of the big things we do is interview our borrowers. Like, what is your plan? Who are you using for your realtor? How did you come up with your renovation budget? Are you versed in the trades? Who's going to do the work for you? So getting an idea based on our long history of what is the likelihood of George succeeding, if where could George's blind spots be, and giving him ideas on how to overcome those blind spots.
Mm-hmm.
So a big component of us is ascertaining or validating if we believe the borrower is going to be successful. And again, because of how prominent real estate as an investment has become, there's a lot of people who watch a ton of HGTV and just think that it's easy and haven't done their homework and are just ready to pour money into what could potentially be losing endeavors.
Mm-hmm. Okay, awesome. All right, so I think we covered a lot here. Is there anything you feel like we missed, or we've pretty much covered all grounds?
I think we covered a lot of really good information as it relates to borrowing from us and real estate investing and in what we focus on, which is that short-term residential stuff. I very much appreciate you having me on, and I hope your listeners get some value from this. Again, I'll share that flip analyzer.
Mm-hmm.
We do one big component of what we do is that education piece. So we're always looking to provide content to the market on how to be successful in real estate investing. So I do invite your listeners to follow us on Instagram, Calvert Home Mortgage.
Mm-hmm.
And any ideas, George, that you have I know you're big into this and you have a great following. So any ideas that you have on how we can help your audience, ways that we can work together, I'd love that.
Yeah, absolutely. Well, I think the flip analyzer is big, especially when you guys also add that BRRRR tab. And I think a lot of people will be interested in getting that so they can see to have that additional way to fund their deals if they need to. So that's great.
Awesome.
Okay, Jesse, thank you so much for joining me. I appreciate it, and we'll be in touch.
Thanks for listening to this episode of the Well Off Podcast. If you enjoy the show, then I'd really appreciate if you left us a review on iTunes and let us know your thoughts. In order for us to get a larger audience, it's really important to have reviews, so your support is extremely appreciated. And also, don't forget to share the podcast with your friends and family. Until next time, I'm George Masri. Have a great day.